Hi, I'm Lisa Leiter. Crain's Focus section this week highlights Chicago's private equity industry, which is showing signs of revival. Earlier this month, I had the opportunity to talk with John Canning, chairman of Madison Dearborn Partners, Chicago's largest private equity firm, at the CFA Institute's conference held at McCormick Place. I began our conversation by asking him about middle market private equity firms and how they are performing in this economic environment.
Company performances are strong. Financing is extremely cheap and available on good terms, very liquid markets. This will be a record year for high-yield bond issuance. Last year was also a record. So there are a lot of good firms in town. There are a lot of good middle market firms that are either specialized in, say, healthcare or who are broader based, but doing middle market things. So I think the industry is pretty healthy in Chicago.
So the appetite for risk is increasing with the high yield market then?
I think the biggest risk high yield investors are taking are not credit risks. I think it's yield risk. In other words, the deals that are getting done make sense. The companies are good, they're solid, they're not over leveraged. But when you buy bonds and the interest rates are this low, your biggest risk is interest rates go up. So that's the risk I see. I do not see this as a repeat of the bubble, and there's one major reason. Back when in 07, the syndication market came to a complete halt, both in mortgage-backed products and in leverage loans. And at that time, everybody thought it was, covenant-light loans with too much leverage on the, in the balance sheet, and none of those companies that got financed went bankrupt. And they were big. There were 17 deals at more than $10 billion in 06 and 07 before the problem happened because banks had over $400 billion of either commitments or inventory of leverage loans that they had planned to syndicate. The syndication market shut down. The value of those loans dropped, not because of credit problems, but because of illiquidity and no available buyers, and they had to mark to market. This now, if you take a snapshot now, that's say $400 billion on bank commitments. Snapshot now, $15 billion in the whole industry. So banks are not taking long-term commitment risk, and those commitments they couldn't get out of. They were virtually unconditional commitments. So I do not think this is a bubble at all. I don't see companies that have troubled balance sheets or troubled businesses in private equity world. So I think it's a pretty good time.
Some of the sources that Crain's is talking to for this private equity issue are saying that institutional investors are going after smaller funds. Do you think that Madison Dearborn is going to have to raise smaller funds?
A lot of endowments are looking at China and India, so that's a focus. A lot of them are looking at getting their relationships winnowed down. But now that the stock market's come back so strong, and the performance in the private equity has been quite strong, especially last year, going into this year. I think the appetite for alternatives is still pretty healthy. I think if you'd asked me 2 years ago, that would have been a different answer. When many endowments got in a real tight liquidity position, and they've all recovered. So I'm fairly optimistic.
There seems to be some consolidation in the Chicago private equity market, some firms shifting strategy, closing up shop. What do you make of that?
I think the private equity industry in Chicago is pretty healthy. We've got some really great firms that are $400 and $500 and $600 million funds that have been very successful. They're on their third funds. I think it's pretty healthy. Some of the longer term ones are doing quite well. I think things are pretty good. I'm an investor in a lot of those funds, and I know they're doing quite well.
John Canning also talked to me about his personal investment in Sun Times Media Group. To see that part of our conversation, go to chicagobusiness.com/multimedia. I'm Lisa Leiter for Crain Chicago Business. Thanks for watching.